Welcome to Trading Lounge and the Indices report, and starting with the US markets today and the S&P 500. Just looking at the weekly chart here, and the main purpose of this is just to track the weekly volume, because if we're thinking about going on the long side, if that develops the way that we would like it to, then we would also like to see increased volume on this bar here. And when you're reading volume, it's the relationship between the current volume bar and the previous volume bar, and also the price bar as well, the high, the low, the range, where the open is and where the close is. So currently what we're seeing at the moment, we're seeing, well, let's just go back a little bit. Let's look at this bar here. We had increased volume on this bar here in relationship to this bar here, so that's selling pressure. And then we had this bar move down through here, and this is a bit of a subtle one, this one, because yes, it did close on its low, but it had a shorter range than the previous bar. So in fact, it's actually slowing down, and then it closed up off the low there on increased volume over this bar here. So we know that the buyers have come in. And what we would like to see now, of course, is that this market push higher, and would also like to see increased volume. In fact, we want to see more volume than this bar here. If we don't get that, then there's a slight divergence in the market and a slight weakness, and we need to accommodate that. Of course, we'll look at it on a smaller view as well, but it's just nice to know that the volume and the orders are pumping and, you know, pulsating in the right direction that we're in as well. So the volume confirms the price action, and that's what we'll use that for. In terms of price action, just on the daily chart here, we've got this nice trend line through here. We expected a bounce off it. We're getting a bounce. Technically, a bounce is a three-wave price action. So 3 waves in Elliott terms, that's an A and a B and a C. Those 3 waves could develop into 5 waves. And if that's the case, then we know where we are, because 5 waves will give us the direction of the market. But 3 waves is just a counter trend, and that's what we've got at the moment, and that's what we're working through. Now, the counter trend normally pulls back, 50, 60 odd percent, the golden mean ratio at 61.8, and that comes in around the 2080 here. And on the cash market, you'll see a little gap here as well. So the market will want to plug that gap. So that 2080 is sort of what we're looking at through here. We're looking at an impulse wave up through here. An impulse wave is 5 waves, and that's what we're looking at through here. So this is not finished. Now, also too, with this count on this chart here, this was a count that we originally had, and we had 2 counts. So I think that we can remove this count now, because as a wave 4, it should only pull back up 38.2%. So this one was a little bit over, so that's acceptable, but we can see that this one is going to be going from, this particular price, 2063.65 area here, up to 280. So this wave 4 one here, we can pretty much eliminate that now, but it doesn't get us out of the whole problem here of being a 3-wave rally here, an A and a B and a C at the 61.8%. So we're still looking at, this old high here as such. But this is more of a, this is a better count, as it says. So we can remove the other one and look at this one. Now, I am a conservative, crusty old thing, so I've labelled it as an A and a B and a C wave here, so we don't get sort of high on ourselves and get lost in ourselves and so forth and get trapped. But this could certainly develop into 5 waves in terms of 1 and back for 2 here, a nice strong 3rd wave here, which we're kind of getting, then the 4th and then a 5th wave here. So I know then we'll get our A and our B and our C, and then we'll be off from that point there. So that's what we're working through. So we've got this count here, and we've got this count here. So they're both reasonably valid. I still prefer this ABC count here. But what it will sort of boil down to is that you know, once this 5 waves and this little structure here finishes, and we can just drill into this a little bit now. So we're looking for 5 waves up here in wave C here. After we get this 5 waves here, then we'll get some type of correction, or, you know, we may just go straight down from there, you know, because it's a corrective pattern. But let's just see if we get some, well, let's see if we get a corrective pattern here on the pullback, and also secondly, will we have support on group 2? 65, 72 and 80, very important, and more so important is the 72. So if we can develop a nice support on the 72, then that's going to help us to the upside as well. So these numbers become important in terms of trading. So look, if you're long, that's fine. I would suggest that, well, depending on the time frame that or degree of structure, even better still, because time frames can be empty, you know, like a 1 hour bar can have a lot of volume in it or no volume in it, you know, so it's a bit pointless unless it's a tick chart and you know that there's 40 ticks per chart per bar, whatever you're working on. But look, yeah, so once these 5 waves are completed here, then you can look to exit sort of above the 2080 there. If you're going to hold long and try your luck through all of this, then you'll need to keep the stop well out of the way, and you'd probably need to keep it down under this low here. So it's pretty much outside of group 2 at 65 here. So maybe 2056 would get you through. You might get lucky at 2063. Those two numbers would be about it if you wanted to hold on through that. In terms of tracking this further to the upside here, I was thinking a little bit like this here, this not using this particular one here, but this one here as one, but I'm aware of this kick up through here. But wave 1 here, and this seems to be, even though I've labeled this the way that I have, I can take wave 3 up higher here, because it does appear that, oh no, I'd still have to work with that. I think let me just have a look here. So if we use this for 1 and 2 here, and this is 3 and 4 and 5 here, and then still 4 and still 5, yeah, so we're still heading up above the 2080 here. There's still further to go, but the main point is that once we get up to here, it's the retest into group 2 that we're looking for. We want to see it as a corrective pattern, and we want to see it kicking back in here as support into the 72 there. As you can see here, how important the 72 is here, but you know that anyway. So that's all good. So the Dow Jones is roughly the same. However, the Dow transports are up even higher, and I like the Dow transport, so that's always a bit of a good lead in. Now, this is just a daily chart, and this is a bit of a guessing game on the wave count as well. It's a little bit unusual, and it's probably a bit unique in that sense, but it fits quite well, and I like it, and I just thought I'd put it there as such. But the A wave to here, a bit of a running sort of regular flat correction really, but an A wave to here, an A and a B and a C, and then a C wave down here. This little line down through here, this would mean that wave C equals wave A here, because they normally, wave A and C normally have some sort of equality as well. So realistically, it's not far off, and oddly enough, this is probably one of the better counts. It may not be the right count, and I can cop that on the chin. It doesn't matter. But the idea of this report is just to, you know, explore ideas as they come about. Obviously, our main point with the Dow is the 18,000 as support, because currently it's resistance here, and while it's resistance, then there's risk in the market of being long. You know, you don't have to capture the bottom or the top and all the rest of it. You just need to get your fair share of the pie. But in this case, we're not at support yet, are we? You know, it's as simple as that. And even if this market pushes up, which we kind of expect it to, but you know, even even if it pushes up here, it's got to come back and test it. You know what I mean? It's just got to test, and once it's got it, then it can move up higher from that point. So there's plenty of time yet with all of this. The trend line through here does come back a little way through here, off the other wave 3 there, so it does have a bit of it carries weight from that. But I mean, the other irony too is that I know from just stocks, I know this is an indice and so forth, but at 18,000 this is just a minor trading level here. So if the market was going to fail, it would fail from the 18,000. And when I'm talking about failing, I'm talking about not finding tested support on 18,000, because when you're trading, when you've got support at when you've got trading level 1, which is 10,000 or $10 or $1, then you can normally look to $2, or in this case 20,000 or $20. So trading level 2. If the market is going to fail along the way, it is normally at the 18 here, but we know that 18 is a profit-taking number, and first whole number before the next large first even number before the next whole number, the 20,000. So it could be 18 cents, 20 cents. So, but normally when a market finds support on the midpoint, which is the 15,000, then the 20,000 or the trading level 2 is normally a said and done thing. So I'm reasonably confident of heading higher, but the support on 18,000 really clinches that, and we don't have that yet, but we're watching it develop now. So I think that's interesting, and that's why I brought up this chart. The pattern's not that important. The support on the 18,000 to me is more important. Okay, so just drilling into this a little bit now is that we still, from the top here, we still have a reasonable 5-wave structure to the downside here. So we'd expect another 5 down after a counter trend, and the counter trend as a and a B and a C would pull back to the 50-60%, which is basically at the 18,000. So we need to see that play out, and this will be the same as the S&P, of course, with the 1, 2, 3, 4, and 5 here as this market here, as this structure. So we just need to allow this to play out, and once again we need to see the 18,000 here get a retest on it and get a reference point, and then we can trade that high there through there. That's the safest thing that I know of. But if you're long now, you really need to keep the stop well out of the way to accommodate any of this here, and at least that this these swings are going to occur across the 18,000. You can prepare yourself financially and also emotionally as well. Just drilling into this a little bit further, the 61.8 retracement level is just above the 18,000 here, so this old high will carry weight as well. Anyway, it's there, and the other side to this is that it can hit number 1 here, 100, and then move back and do it from that side there too. And if it's going to hit 1 here, then we can look back at an even distance above and an equal distance below as well, and that will come in quite nicely here as well. So when dealing with the 18,000, that's your first range swing here that you'll need to soak up. The DAX is in a world of its own, so to speak. It's it's really cranking to the upside, and of course 13,000 is the next major trading level. So we've got 8, 10, and 13 such. So anyway, that's the bigger picture. So that's what it is. In tracking this up here, we're still looking at wave 1 and 2, and wave 3 and 4, and then up for 5. The 4 currently is the 38.2 retracement level of wave 3 here. We are getting an extension in from wave 4 here all the way into wave 5 here. And, I could sort of revert that to wave 3 as I've mentioned before, but I'm going to stay with it because I know that wave 1 here also had the extension in the 5th wave here. and we are in the fifth wave, and we're getting an extension in the fifth wave. It's normally in the third wave, and I am tempted to change the count somewhat, but I don't have enough evidence to do that yet. But it probably better. It'd probably look better if I'd put this here like this here. So we've got wave 1 and 2 here, and then the strong third wave coming into here, then the fourth, and then the fifth up here, and then the 3 here. So that's a real possibility as well. But I have to say it doesn't really matter at this stage, because all we can do is just continue to track the internal wave structure to the upside. And with that in mind, that's what I've just been doing really, and that's that. So we can always see that it's going to push up, and it's still going to push up here further as well. So if we look from wave 4 here off the 11,500, we're looking for 5 waves up here to 2,300 roughly, and I can map that out here. So the 1 and the 2, the 3, the 4, and then looking for the 5th wave up here. But in this 5th wave up here, say from this wave 4 here, let's just drill that in here. So we've got wave 4 here, and we've got 1 and 2, and we've got up for 3 now. We're looking for 4, and we're looking for 5. So we're looking for a high just above 12.3. So that's our next support of call there. So trading from support at 12,200 here to 12,300, that will be a nice little trade there as well. But yeah, expect it to not find support. I can trade above 12,300, but not to find support on it. That's the top of group 1, so of 12,000, so 1, 2, and 3, just all of group 1. But if it does find support on 12.3 and I'm wrong, then the target automatically becomes the next number, which is 5. So 1, 2, 3, and 5. But we need tested support on 12.3, and finding support on 12.3 can actually get a swing from 12.4, from number 4 back to 2, in that sort of vibrating there before it finds support on there. So don't get chopped up in the meantime. It's far better off to trade to the 12.3, get out, and allow the swings to happen. And in your own time or market time, then, just observe the market until it's got tested support on 12.3, and you can see a corrective pattern that you can work from. But we'll have a look at that as it unfolds. We'll drill in onto the detail for that one. The FTSE is, well, we know that it's a struggling market, and this type of weekly chart here, this type of price action that we've seen here, is the type of price action we've seen in here on the daily as well. So we're getting reoccurring patterns. In terms of the larger pattern from wave 4 here, we're looking up for 1 and 2 and 3 and 4 here, and 5. Now, wave 4 here, a little bit like the US and, a bit like the US and the Australian market. We don't know if this wave 4 is complete. Probably is, but I can't confirm that. That's the difference. But with that in mind, we're looking at this wave 4 here. And I've got it labelled in both B waves, both A waves, and both C waves, just of different degrees of structure, because at the end of the day, this correction that we're looking at coming down here may just be the A wave to here, a B wave into here, and then a C wave over to here, and then wave 4 here. So I don't know that yet, because this particular structure to the upside needs to move past a 3-wave correction as such here, and this last structure that we're looking at will be 5 waves up here. So we need to move past this. We need to get another correction here, and then a move up. Then we got 5 waves. Then we know we'll get a counter trend, and then we'll get another 5. So this will be wave 1 and wave 2 here, wave 3 coming up here, 4 and 5. But we need to see this here. So yeah, that's just the way the cookie crumbles, unfortunately, and that's the problem of being in corrections. It's the weakest sort of link in the Elliott structure of a motive wave, 5 waves up, 3 waves back, corrective pattern. So anyway, that's the little pattern that we're looking for here. Maybe I've drilled this in a bit better here. Okay, so look, I have labelled it as wave C here, but don't take that as a set in concrete. This could certainly still be a corrective move up here, but I've labelled it wave 1. back for wave 2, a nice corrective pattern here. And we're getting an impulse wave up here. So we're looking for, well, the 3-wave structure here of an ABC or 1, 2, and 3. But our main focus now is just this 5-wave structure up through to here. And once that's completed, that's where it can fail and just move down from that point. So we just really have to wait for tested support on 6,800, 808 minor level. So it is important. We know we've got old highs at, the 6.9 area here. Look, it's probably not the best market to trade because it's just sluggish. So, it would have sharp retracements, smaller ranges to the upside. It's not the pick of the bunch, So it's okay. The Australian market. Okay, so as you know, the bigger picture here, we've got wave 1, wave 2, and we've gone up for wave 3, and we're looking for wave 4. Now, wave 4s are normally sideways and complicated, especially when wave 2 is a simple ABC zigzag pattern. We can expect wave 4 to be sideways and complicated. The 38.2 retracement level for wave 4 is at 57 here, or the wave 4 of 1 lesser degree, which we basically have anyway. So it is possible that wave 4 can be completed here, and we can move straight up from there. And the banks would suggest that, but we don't have confirmation there. But I think by the end of the day, we will have confirmation, depending on the mining sector, because BHP and Rio can really weigh close up there on sort of 50% and start pulling the market around. Once again, we're in the same situation. We've got this first leg down here, and we're looking at probably an A and a B and a C wave back up to the 61.8 retracement level, which is at 6.9. That's where the supply is through here. So it can fail and give us 5 waves down here for wave 4 before we see any upside. That's possible. It's also possible just to move up through here. So if that's the case, if that's the 61.8 retracement level, 659, we would need to get support on that. Okay, so tested support on 5.9 would be one of the elements that we could use to, look at further upside there. But until we get there, we don't know. Okay, so sort of remove that. So in a nutshell, we don't know what's going to happen here, but we do know that if we get support on 5.9, then the weight shifts to the upside because that's the supply here. The sellers are here. At the same time, we can use, track the same pattern as the other indices. So with that in mind, it's looking a little bit like this, and I kind of think it is a corrective pattern actually. I mean, this here does appear to be in 5 waves here when you look at it in first glance, but when I take a closer look at it, it's actually more like in 3 waves up, in terms of up for an A here, then an A and a B and a C here, then 1, 2, 3, 4, and 5 here. So basically a corrective pattern to wave A here, and a wave B came back down quite a long way too. So that means, if it held up here somewhere, that means it'll be quite strong, wouldn't it? But this sort of like, whoa, down here, that's, really put a, that's sort of a bit of a slip there, isn't it? It's just sort of expressing the weakness of it. So what we are looking for here is 5 waves up, the 1 and the 2, and in the 3rd wave at the moment, a 4th and a 5th, and up to the 61.8 retracement level, which we also know is the supply level here. So it can fail from here, okay? It's fine to trade up to this point here, but I would certainly be looking at exiting somewhere close at the 8s here or the 9s here, and then just waiting for the market to unfold at that point. Now, in terms of moving up here, this is, well, if I come back here, this is where I've got the ABC correction, and I kind of like it really, an A wave to here, an A and a B and a C wave in little 5-wave structure here, up for 1 and back for 2 here, the 3, the 4 and the 5. So it really fits as an A and a B and a C wave here. I've got wave 4 here, but don't worry about that. and then down in 3 waves here, so it definitely makes it a bit of a B wave here, and then we're working up from here. So in terms of working up, we've got 1 and 2, and we'll be looking at 3, 4, and 5 up here. So this is where it starts to sort of, get weak at this point here. So with that in mind, if we look at CBA, because it's obviously going to be the driver to the upside, we can see just on the weekly chart here, well, I've got it here, I didn't mean to bring that up, but we can see that this pattern here is corrective, and it's corrective because it's got overlapping wave structures in it, so it's just basically vibrating here, so it makes it corrective. So we'll see further upside. 100, of course, is the finishing line now that we've got support on 80 here. This is what we're talking about with the Dow Jones really as well, but it has at 18,000, but still a minor level here, and it developed this little support in here. It takes a while. It's a profit-taking number, and the commercials will come in at large numbers and whatnot, but yeah, so we're looking at this pattern here. This, it's a wave 4. And so far it fits okay as an A and a B and a C. Yes, it could get much bigger and uglier and all the rest of it. So what we've been looking for is well, will we get 5 waves up through here? That's what we've been looking for, basically an impulse wave. And we do have one. It's not the best looking thing I've seen, but still we've got wave 1 and 2 and 3, back for 4, not overlapping wave 1, which is cool, and in 3 waves here. So now we're looking for a move up here, and we should get a new high above wave 3 here today because markets are up. So when we open, so we should end up in an odd way getting this 5 wave structure here. Okay, once we've got that, then we'll be looking at a counter trend and then the 3rd wave up here. Okay, so yeah, so it is looking good. BHP is, sinking into its 30 here. It's 61.8 retracement level here. So, yeah, look, I can count 5 waves up here. So we were looking for the, the retest of 30 and the 61.8 and all that sort of stuff. Now, I don't know if this market is actually going to just be the ABCs all in, because there's gaps in here. It's very difficult to work it all out. So I don't know if that's just the correction. We're going to move up from here, or we move down here as an A wave, back up for a B wave here, and then down for a C wave here, and then move up from there. What I do know though is that the 33 here is group 1. So if we get support on group 1, then we've got ourselves a nice strong trend to the upside. Yes, I know that's a long way away and all the rest of it, but we do need to be a little bit careful here. And the reason for that is on the bigger picture, I do have a bearish count that I can't eliminate just yet. And this is a monthly chart here, and it's fitting for further downside, and it becomes noticeable, when it's labeled like this and looking like this, because all this move up here is corrective as an A and a B and a C here, testing supply, and it's failed, hasn't it? And this is what it's doing now. It's moved down here in weakness, and it's gone back up, and it's testing supply zones up here, sellers, and it's been pushed down again into the 30. So it's a real game of supply and demand here, and it's playing out at the 30 here. So we just need to see how this plays out, because I'm very happy to go short here as well. So, but don't do that yet. We will want 30 as a really nice retested resistance. So there's a lot that's got to play out in all of this little game here yet before we're confident that we've actually know what we're doing here. So just need to chill out on the material sector, and if the market is going to go higher, yes, and the BHP could move up too. I mean, it was up nearly 1% in the US last night, so we can have our low in here, but to me, buying the bottom is not really. There's probably more money in the turns, but the risk is higher, and so is loss. And yeah, I'd just rather buy on confirmation. Anyway, that's enough waffling. That's all of that. So that's that. Cheers.